Thank you for joining me. I'm Alex. Welcome to Costco. So what Costco does is wholesale and literally nothing else. They have giant ass stores with basically pallets of stuff. They don't fill shelves or anything. They just have pallets basically where you can take stuff and pay for it and buy giant quantities of stuff and sell to businesses and everything. So price is $289. Which makes the market cap of $127 billion and a PE of over 35. So already a very high PE, but also a very safe business model, and they've been doing very well for the past few years, despite Amazon and everything. Dividend yield very tiny, 0.91%, so slightly under 1%, with a payout ratio of 29%, which isn't actually that much, but you probably don't invest for dividend in this company anyway. Revenue $142 billion, which is quite significant. For comparison, that's about a quarter of what Walmart does. Earnings $3.1 billion, which is also just about a quarter of Walmart. So they're doing very well for themselves. Total assets $41 billion, total liabilities $28 billion, total stockholders' equity of $13 billion is right there. So they're definitely doing well. They're definitely growing at a pace that you would expect from a company this big that's doing very well. And so I don't think I can recommend this stock because it's just slightly too rich. A PE of 35, basically no dividend, and the growth, there's just not too much room for growth. I think that 9-ish%, 10% is really pretty much the maximum you can expect for a company with that big revenue, with basically just a brick and mortar business. Obviously, they could grow on the web quite a bit, but shipping is fairly difficult for large quantities, so they would have to raise prices to include the shipping cost in the price, and that is difficult. That's kind of where Walmart loses on Walmart.com right now, because Walmart.com has the same price in stores and online, which means that the shipping cost need to be factored in, which means they're losing money right now rather than raising prices online. So with that said, obviously if you're a dividend investor, you're probably not going to invest in a company with less than 1% dividend. If you're a growth investor, you're probably not investing in a company that cannot really grow that much from now on. And if you're a value investor, I think the PE is just slightly too high to justify a company like this. I think that in a recession, they would be hit fairly hard because of all the business-to-business transactions, and because people tend to buy smaller quantities, even though that makes no mathematical sense. It's just that people tend to spend far more money going to wholesale stores rather than going to smaller stores, because they tend to buy more stuff that they don't currently need. So in a recession, I think they would get hit fairly hard, and I think the market price, the market cap, the stock price would drop significantly. And at that point, I think it would be probably a decent buy, because there is no way Costco is going away anytime soon. But I think that right now the price is just slightly too high for me to be interested in investing in this. That's it for me for today. If you like this video and you haven't already, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.